Good evening, this is ENCA Moneyline, your money guide. My name is Sikim Kabadeli. Coming up on the show tonight, producer prices have slowed at the factory gate with PPI easing in South Africa. The rand is beginning to pay for the ruble's downfall as Russia heads into a recession. And the Road Accident Fund has had liquidity problems. We speak to the CEO on how cash-strapped the company really is. All that and more coming up. But first, here is your top story. Producer price inflation data shows that prices at South Africa's factory gate slowed to 6.5% year-on-year. PPI measures the average change over time in domestic producers' selling prices. The slowed year-on-year figure of 6.5% was in line with economists' expectations. Prices for the first commercial products remained flat in November after it had edged up by 0.3% before that. The rand is being affected by the ruble's depreciation. Economist Mike Schussler says Russia is viewed in the same emerging market basket as South Africa, thus the rand will suffer the same consequences. The currency has fallen to levels last seen 6 years ago against the US dollar. It hit a low of 11 rand 93 cents to the dollar in September 2008. This evening, it's trading at around 11 rand 57 to the dollar. The Russian ruble, meanwhile, has lost around half its value against the dollar this year. Russia is the world's second biggest supplier of platinum. A new IMF report says South Africa can celebrate significant progress in the 20 years of democracy, but with power blackouts and fears of more credit rating downgrades, the country still faces major challenges in reviving a weak economy.
Unemployment remains above 25% in South Africa, but the country has made significant progress since the dawn of democracy. The International Monetary Fund agrees, but warns that 2015 could be its greatest challenge yet.
Some of the most recent data points have been quite encouraging, signaling a recovery from the strikes earlier in the year. However, we do still see growth as fairly subdued, and we're projecting 1.4% growth for this year and 2.1% for next year.
The IMF says the country is suffering from a number of deep economic and social challenges. A lack of investment in its infrastructure has led to some of the worst power cuts in 6 years. Blackouts have become a frequent reality, but even worse still is the 15% of the country that remains disconnected from the national grid. This has raised fears of further credit downgrades after narrowly escaping a cut last week from Fitch and Standard & Poor's. S&P and Moody's downgraded South Africa earlier in the year.
I suspect that that we'll see the status quo maintained in South Africa for some time to come. We will see ongoing labour unrest. We obviously saw a big strike amongst the platinum mine workers for better conditions and higher wages. But I think investors that are going to put money to South Africa will be well aware of both the political risk and the economic outlook for the country.
The platinum mine strikes were the longest in the sector the country has ever seen. The industrial action lasted 5 months, shutting down 40% of global production. Mine owners lost billions in revenue. But the miners eventually settled for an annual wage increase of 20%. The IMF says South Africa is making all the right noises, having announced a 5-year economic plan in October. This includes tax increases and job freezes in the public sector. This is all aimed at curbing the deficit to 4.1% of GDP, which was forecast for 2014-2015.
Well, the Road Accident Fund CEO Eugene Watson says the company intends to honour its commitments to claimants. With over 14,000 claims paid monthly, the company has struggled with liquidity. We're joined now by the CEO, Eugene Watson. Eugene, thanks so much for your time this evening. What's caused these liquidity problems?
Look, in short, you have an entity that's funded by a fuel levy. The fuel levy set annually, and economic factors of affordability for the state and for consumers are considered. What you've seen with RF over the last few years is the institution didn't perform. So we always had enough money. But since 2012, we took a concerted decision to change how the entity performs, and we've improved our performance, breaking records in the last financial year, paying a record of 22 billion rand. So that performance lift has quickly outstripped our fuel levy income, and this is the dilemma you find us in at the moment.
So you're almost a victim of your own success in your turnaround strategy.
We actually are.
So how much do you need?
Well, at this point in time for the current financial year, above the 20.5 billion rand we get in fuel levy income annually, we need an additional 7 to 8 billion rand just to honor the claims we've prepared.
Goodness. And is that going to be forthcoming? Are you talking to Treasury? What's the situation?
We've continued our engagement with the National Treasury as well as the Department of Transport.
Yeah.
We're cognizant of the priorities our government has. But you do have a law. It says you shall compensate victims of car crashes. And the truth is there are just many more claims on hand than what we're currently being funded via the fuel levy.
14,000, you're dealing with 14,000 monthly
claims
a month.
That we've finalized.
I mean, obviously we need to deal with road safety.
Absolutely.
And get less accidents on our roads so that, firstly, we just have more people staying alive, but also putting less pressure on the fiscus.
Yes, I mean, there are two legs to that. The first is road safety matters. It is an underwriting condition for the RAF. So we should focus on that. We should save lives. It will reduce claims. But in the interim, you have about 100 billion rand worth of claims which have been incurred or registered, and at some point in the process of finalization, which will need to be honored. So road safety by itself at this moment will save us money in the future. But the reality is right now what you need to honor those claims is money.
So how are you going to deal with that backlog then?
Well, what we're trying to do, we have a cash management strategy in place. We consider the different categories of creditors. We ensure that everybody gets some money, and we put the message out to say every month we get almost 2 billion rand in fuel levy income. Yeah. We may not be able to pay you as soon as you want, but we will eventually pay you. We're not going to go out of business. We're not going to run away. We're not going to default on our obligation. You just are going to have to wait because our income comes in once a month.
And what's been your turnaround strategy in the past, and have you now found that there's been a bit of a lag in that now?
Well, what you see at the moment, because we continue to improve our performance, is that the amounts of time taken to pay are slowly increasing. Earlier this year, at about May or June, you're looking at 30 to 60 days waiting time. Yeah. At the moment, you're looking at almost 90 to 120 days. And it's purely because the supply chain of finalized and settled matters is moving.
Yeah. And what have you done about communicating with claimants then and the legal fraternity who deal with these types of cases?
We've been sending out messages. We've sent out everything from text messages to letters to communiques to the judiciary, to the registrars of the court, to sheriffs, to attorneys acting on our behalf as well as for the claimants, and also informing claimants who've come directly.
Are there specific changes, do you think, that need to come to the road accident benefit scheme that would help with sustainability? Because sustainability is, of course, the key issue. What would you like to see?
The road accident benefit scheme is a piece of draft legislation that's being developed and consulted on. That has to move forward. The current arrangement as we know it, based on insurance principles of compensating for loss, are not sustainable. You cannot have an arrangement that's been insolvent for 33 years and you perceive it to be okay. Yeah. We need to make a change, we need to access more people, and we need to rationalize what we provide. It's a lot of money we're talking about, and there's a limit to what government can do through any legislative vehicle.
All right, we'll leave it there. Thanks for your time today. Eugene Watson is with the Road Accident Fund. Now, a deep recession is now a certainty for Russia in 2015, and with its high dependence on oil and gas, things could get much worse unless the country begins to look for other options.
Russian President Vladimir Putin is confident that the ruble will bounce back, but says economic difficulties may last up to 2 years. Russia's economy is heading into recession. It's being hurt by low oil prices, Western sanctions, crisis in the Ukraine, and other global factors. This has seen the ruble tumble down 46% against the dollar, forcing Russia's central bank to spend over 900 billion rand in an effort to prop it.
Of course, the current situation is caused by external factors, first of all. But we also understand that we have not done many of those things we planned to do, and we said we would do to diversify our economy over the past 20 years.
The central bank has also made 6.5 percentage point increase in the key lending rate to 17%.
I think that both the central bank and the government are taking adequate measures in the current situation. There are also some questions to both the government and the central bank about the timing and quality of those measures. But as a whole, the actions are absolutely adequate and in the right direction.
But he's confident of some light at the end of it all.
But there is also no doubt, and I would like to underline it, the rebound, the subsequent rise of the ruble and the exit from the current situation is unavoidable. There are at least two reasons for it. First, the global economic growth will remain. The pace is declining, but the growth will still be there. The economy will be growing. And our economy too will emerge from the current situation. How much time it will take? In the worst case scenario, I think about 2 years.
Putin now wants Russia to diversify its economy in order to reduce its dependence on oil. After the economy has suffered in 2014 from the falling oil prices and several rounds of sanctions imposed by the European Union and the United States.
At the same time, German Chancellor Angela Merkel says sanctions against Russia are unavoidable.
German Chancellor Angela Merkel says Western sanctions against Russia will remain until Russia respects Ukraine's sovereignty and engages in dialogue.
We want to face together the challenges posed to international security, of which there are plenty, but we cannot travel this path alone. It is up to Russia to accept our offer of dialogue on the basis of the values of lasting peace in Europe.
Merkel was speaking ahead of a two-day EU summit starting this week. She defended her tough stance against Russia.
As long as we have not achieved this goal, sanctions will remain unavoidable. But I would like to emphasize once more, they are not an end in themselves and never were.
Leaders at the summit are expected to discuss widening the ban on investment in Crimea and whether to target Russian Black Sea oil and gas exploration. Merkel also said that the economic crisis in the Eurozone was under control, but that further work needs to be done to boost the European economy.
We have this crisis under control, but we have not overcome it definitively. It is, as I have said time and again, there are no quick and simple solutions. There is also no decisive blow that would get rid of all these problems overnight and forever. This crisis can only be overcome step by step and, above all, only through fighting its causes.
Merkel stressed that she is seeking a dialogue with Russia to achieve a secure European relationship and that she's not against Russia.
After the break, all the big business stories for 2014 unpacked with Songezo Zibi from Business Day. You're watching ENCA Moneyline, your money guide. Stay with us.